Okay guys, in today's video I'm going to be showing you some of my favorite indicators, and I'm going to be showing you exactly how to use them and explain to you how people use them wrong. Okay, so the first indicator we're going to get into is the moving average. Now my personal favorites are the 8 and 21 period moving average. They are both EMAs, so an 8 EMA and a 21 EMA. I like these two moving averages together because I just find it helps me see things better. Now, this is the wrong way to use moving averages. When you see they're on the bottom, you're just buying randomly. A lot of people do that, and also a lot of people do moving average crosses in their trading. So the second the moving average crosses, they'll hit in an entry, and when you're back testing, it looks great because you go, oh wow, look where it crossed. If I'd sold there, it would have worked out great. But little do you know that this candle would have actually been the candle that made them cross. So you would have only seen them crossing after this candle. You would have then sold, and you would have actually lost that trade. That just comes down to back testing, and that's why I don't like back testing, but that's for another video. So that's the wrong way to use moving averages. What I use moving averages for is simply just to help me see the greater picture of what's happening so that I can form a bias in my direction. So I use them as a momentum and trend indicator. So when I see them opening up to the upside, I know I am looking for buys. It doesn't mean that I'm just going to randomly buy. It means that I am only looking to buy this market. When the indicators are spread out to the downside like this, I am only looking for sells because that is showing me that momentum and potentially the trend is to the downside. So I use these two moving averages as a momentum and trend based indicator just to help me see things better. Okay, on to the next indicator that I like, and I'll tell you exactly what I use it for, and that is the RSI indicator. Just by the way, when I use any of these indicators, I usually use the factory settings, so I don't have any fancy settings on the RSI, I just go with the default setting. And a lot of people use RSI. This is how most people use RSI, and it's not to say that it's entirely wrong, but I don't like to use an RSI for this because the results aren't that great. And people like to use the RSI to see overbought and oversold zones. So as you can see, if this line moves above the overbought area, you're looking to sell. If price moves under this oversold area, you're then looking to buy. Now personally, I don't like using the indicator for that purpose because as you can see, price moved under after this candle, and then you would have been looking for buys, and there's a very choppy market and it's an overall decline anyway, so you probably would have lost a few trades in there. Same goes for this. As soon as it moves above, you think to sell, and as you can see, price continues to move slightly up. So that's the reason I don't like to use it for that, because it doesn't really give consistent results, or I at least don't like to use it like that. And what I do use the RSI indicator for is to spot divergence. Now, divergence is when this indicator or an oscillator is doing something different to price. So basically it's sensing a shift in momentum or trend. Okay, now I'll give you a great example right now of some divergence. Now this setup here would be a good divergence setup in my opinion, because let me just show you. As you can see on the chart, price has moved from that point to this lower point. However, on the oscillator, we actually have something completely different. We actually have a slight up slant. So from there, where this happened, to there has actually slanted to the upside, creating a divergent setup. This is slanting to the downside, this is slanting to the upside, which shows that this could just be a massive volatile candle or stop hunt or something like that, whereas momentum is actually shifting to the upside. So that's what I like to use the RSI indicator for, is to spot divergence. Okay, let me go on to the next and very last indicator that I like to use, and that is the Bollinger Bands again, factory settings. So to explain what people usually use Bollinger Bands for, people usually use Bollinger Bands as a range bound tool, which can work great in a ranging market, but not in a trending market. So when you're in a ranging market, it can work great where when price touches the upper Bollinger Band, you want to sell. When price touches the lower Bollinger Band, you want to buy. Now, that's what most people do, but unfortunately, this only works in a ranging market, and markets are usually trending during your session, so your London session, New York session, whatever session you're trading. It'll usually be there's usually more trending markets than there are ranging markets. So the way that I like to use Bollinger Bands is when I can see that there is a great trending market. I don't sell at the top and buy at the bottom. I actually buy at the top and sell at the bottom. So as you can see, price touches the upper Bollinger Band. You're then looking for buys. Price continues to push. That's when I can see the momentum's kicking in. I would buy this market. Okay. Again, over here, this look, like I've said in many videos before, you'll never find something that's 100% profitable. You just need to find something that works for you, and gives you a fairly consistent profits over a given period of time. Now, so another example would be if price moves up, touches this upper Bollinger Band, it continues to move to the upside. I would be buying as it touches the top Bollinger Band. Now, it's also important to note that with all of these indicators and everything I've told you about these indicators, indicators are great assistants. They're not decision makers. So I wouldn't buy this just because price has hit the upper Bollinger Band. I would be looking for different types of price action based setups around this. So prices hit that, for example, prices hit the upper Bollinger Band. I'm not just randomly buying. I want to see that that the momentum is to the upside. So price is pushing. I would then perhaps look for a support level that could retest, or a pullback into some form of a moving average that I could trade. So I'm not using indicators as standalone things. I'm using them to assist me with my trading decisions. I'm using them as help. I'm using them as a potential first look. So when I see something happening with an indicator, I know I need to then wait for a potential price action based setup. So feel free to use these indicators the way that I have shown you. Definitely don't only use them like that. You should have some form of a price action based system around the indicators. That's the only way that they will truly work. But otherwise, if you found value in this video, please give it a like, comment if you have any questions whatsoever, and subscribe for daily binary options content. If you are interested in learning how to trade binary options properly, do consider checking out our Viper binary strategy. It is the real way to trade binary options, and it is highly effective. If you're interested in this, go check us out, www.traderoomsessions.com. All the information you need is on the website.